You're watching Business Incorporated live here on Channels Television, a very important decision day for Nigeria's Monetary Policy Committee. Of course, our panel is on already as you started the show with us, Ayodeji Ebro, who is the Managing Director and Chief Executive Officer at Afrinvest. Ayodeji, thank you very much. Give us your first word on where we are at the moment. How did we get to nearly 2 years of hold decision at around 14%, and it looks like this becomes almost impossible to have a breakout, whether to hike or to cut?
Yes, I think it all started with the pressure that we saw in 2016 that dovetailed into 2017 on the FX. And at that point, the CBN was more focused on trying to ensure price stability, which is exchange rate stability. And when we saw that stability, we saw influx of capital inflow. And as a result, we also saw the moderation in inflation rates. And that was pointing to a time where we all felt that the CBN would try to lower rates a bit in terms of also see how the economy can grow. But when you look at in terms of the way the political risks have also set in, as well as the hike in rates in developed markets, as a result of that, we saw the change. When you look at the voting pattern, at the two previous meetings, we had only one of the members that voted for a hike. But the last meeting, we had like three members voting for a hike, showing that trying to see how we can also reduce the capital outflow that we've been seeing as a result of improvement, higher yields in the developed markets, as well as political risk that is an uncertainty ahead of the 2019 election. So keeping rates within this level has been informed by two major, then the era of trying to lower rates and to engender growth. But now with some very evident risk, the CBN would also be trying to see how to either not to change the current stability in terms of equilibrium within the system. There are other instruments like the HOMO rate that can be used to guide rate upwards. So we feel that for us, we feel that the CBN will also maintain status quo and use other instruments within its arsenal to control rates.
Okay, Ayodeji Ebro from Afrinvest. But let's throw this to our panelists, also members of the panel at the studios at the Nigerian Stock Exchange. Victor from Fidelity Securities. Victor, this is about aggressive. The central bank hasn't been able to lower headline interest rates, so it continued this aggressive treasury bills auction and all of that. We've seen that for most of this year. Do you think this will continue if the rates are left unchanged today? And what implications would that have for the yield curve that we're looking at the moment?
Yes, I think there will be an implication in terms of leaving the rates at 14%. Because if we take a look back at in July 2016, where we saw the MPC move interest rates from 12 to 14. At that point, inflation was at 16.28%. The truth is that if the MPC continues to tinker with the MPR, moving from 14 to 15 to 13, over the last 2 years, we might have seen them tinker with that rate for more than 10 times. So for me, I think the strategy is keep the interest rate, the MPR rate, at a level where they can manage it. At that point, you see Treasury bills going as high as yield in Treasury going at 18%, 20% effective yield, the bond yield going as high as 16, 17. Same thing for the money market and the HOMO auctions. On the reverse, when you see inflation trending lower, the MPC have also said, okay, there is no need dropping rates yet. Let's watch how the economy is going to react to inflation coming down. We've seen inflation drop from as high as 18%. It dropped to as low as 11.14. That was before July. That was in July 2018. Yet, the MPC didn't actually tinker with the MPR rate. So for me, I think their decision is actually keep MPR at 14%, tinker with the rates around treasury bills, the fixed income space, the money market, and actually keep investors happy. Because the truth is that if we look at the way rates are going up in emerging markets, the likes of Russia have increased rates, the like of Turkey have increased rates, we actually need to actually keep investors happy. And the truth is that investors are actually going to invest in any region that gives them the highest return with a decent risk.
Victor, this is a very difficult rope for us to walk. So let me put that to Christian. Who should we keep happy here? Christian from Kodros Capital. Do you think we've kept investors happy enough with the yield curve, and it's time now to do something for the domestic economy?
I think it depends on how you look at it. Typically, foreign investors that invest in emerging and frontier markets typically look at two things. So how attractive are your interest rates? And then also the FX, policies as well. Is the FX stable? Are there less control, over FX? So, you agree that most of late 2016 and then also the most of 2017, interest rates for, local yields in Nigeria were extremely elevated. We saw effective yields in excess of 20%, 18% levels. I think foreign investors had good time. More so because from April last year as well, the CBN actually established the INFX window that also helped in sorting out, their FX concerns as well. So we had an environment where we are able to catch those yields at upper 18 levels, and then also you have a very more or less at the time functional, FX window where they're able to bring in their dollars and also get dollars when they're going back at a very market reflective rate. So I think the circumstances have changed a bit this year. Clearly to the interest of the local investors, and then even the average Nigerian. So the CBN and the DMO clearly communicated that from the government perspective, we actually have to reduce our cost of debt service, and also for the credit sector, from the private sector as well, we have to reduce that crowding effect that the market had faced in 2016 and 2017. So hence why the yields are coming down. But also again, from foreign investors' perspective, you have to look at it from two sides. So whilst this have happened, we've also seen that our Naira have been stable. The INFX window still remains very functional with consistent support from the central bank through, weekly, daily interventions as well to provide liquidity even in challenging times like we've seen in the past 2 months.
Okay, Christian.
And then also in terms of rates, you want to compare Nigeria with typically what you get from the advanced markets. Okay. Yes, while interest rates has gone up in America and then the UK.
Christian, my apologies there. Let's just hold that conversation there. We have a bit on you taking us through both the domestic and external factors that are key considerations that the central bank monetary policy will be looking at today for this decision. Thank you very much, Christian Orajikwe and Victor from Fidelity Securities, and of course, Ayodele Ebo. Thank you very much for those initial thoughts on this very important decision day for Nigeria's central bank. We'll be right back. This is Your Business Incorporated. Thank you for watching.